Many will remember we talked about how April was the best month for the stock market, as historically speaking, April has seen the best returns in the entire year over the last 30 years. Now, September tends to be the worst month for stocks, even though many think it will be different this time. Hello everyone, welcome back to the channel. Today we will talk about September being the worst month for the stock market and which stocks would I buy if they dropped during the supposed September crash. If you're new to my channel, welcome. Please consider subscribing and smashing that like button since it really helps the channel out. Also, I have a completely free Discord group chat, which link for that is down in the description below. First of all, I have to say that I know it is impossible to time the market and impossible to know if it will really be the worst month in the stock market this year, but many say it will and others say it will be different this time. First of all, some of the reasons why people believe September tends to be the worst month is first because of seasonal behaviors, as investors change their portfolio at the end of the summer to cash in some profits. Second possible reason is because mutual fund cash in their holdings to have harvest tax losses. Third, because once the fall season begins and vacations are over, many investors exit those positions that had been planning on selling before. Lastly, because many mutual funds' fiscal year ends in September and mutual fund managers typically sell money-losing positions before year end, I suppose because of taxes. This obviously experiences increased selling pressure in the stock market and overall decline. As I have always said before, selling brings more selling, which is why stocks drop faster and harder than when they go up. The September effect comes in because since 1950, the month of September has seen an average decline in Dow Jones of 0.8%, the S&P 500 0.5%, and even though the Nasdaq was first established in 1971, its index has fallen on average 0.5% during September. It obviously does not happen every single year, but on average it does. Still, recently it has been the other way around. The S&P 500 has been up 1.9% in September 2017, 0.4% in 2018, 1.7% in 2019. Obviously, 2020 we saw a decline of 3.9%, but different things were going around in the world. Still, we have also seen that historically, in the years since 1928, when the S&P 500 rose by more than 13% for the first 6 months, the index's median September gain was 1.4%. As you can see, the S&P 500 has been on a constant run for the whole year. The S&P 500 was up over 16% for the first 6 months, and it is up 22.56% year to date. They say that in the years in which the index is double-digit gains in percentage terms for the first 8 months of the year, it rises another 8% to the top of the year. And even though I believe we are long overdue for a healthy pullback in some stocks, I think in some industries, I think that won't happen yet, I believe. The S&P 500 hasn't had a pullback of more than 5% this year, but there are several things that could cause that, which are corporate taxes increases, which could reduce earnings per share by 5%, and that will most likely bring a kind of correction. Still, other things that could affect the stock market are earnings, directions of earnings estimates, profit margin, and interest rates. Earnings were record high last quarter and first quarter as well. Estimations still strong, margins are at record high, and interest rates remain low. Once any of those changes, we will most likely see a pullback in the stock market. Still, it is very difficult to predict as markets are irrational, and maybe there is a reason why earnings decreased, but it is also an excuse for the quarter and we don't see a pullback in that industry. Which is why I don't like to time the market. Also, because I believe the Fed and the Delta variant tells many that the market should be lower, but the market is putting a positive spin here, telling us that the Delta variant will not affect us that much and we are not going to see shutdowns again. And the Fed has also mentioned that there is very little chance that they will raise rates, which makes everyone believe we will not see a pullback yet. Still, only 62% of the S&P 500 stocks are up this quarter, and the market remains at new highs, but only because we are back to that situation where a small group of the largest companies are keeping the market afloat. The S&P 500 rose 5% this quarter because Apple is up 12%, Microsoft is up 18%, Alphabet 18% as well, Amazon is flat, and Facebook is up 10%. Many might have seen my videos of stocks that I'm looking to buy this month of September, and those two stocks are Amazon and Shift, as I believe they have a lot of potential long term and I like their current prices. Many may know that my average cost for Amazon is very low, which has made it difficult for me to add at current prices in my main portfolio, but also helps me if I would like to buy it right now, as I am already up 100% in my position. Still, the stocks that I would buy if we see a pullback in the stock market or the typical September crash would be the rest of the FANG and possibly Tesla. I do have to say that I have teeny tiny position in M1 Finance, in which I only invest in Facebook, Amazon, Apple, Google, Microsoft, and Tesla, and I add a really small amount of money monthly. It doesn't matter if the stocks are up or down, I'm adding that small amount monthly constantly. But for my main portfolio on Robinhood, I'm still waiting for that pullback to happen to buy these stocks, which is why I only selected Amazon right now and Shift right now, as I don't see the market going down yet, but I like Amazon and Shift current prices. Many may ask, why would I buy more of the FANG stocks if we see a pullback in September and not buy other growth stocks that could give me a possible better return? Well, first of all, that is never a fact. Impossible to know what will happen and if those stocks will give me a better return. But I decided to pick those stocks because my other growth or more volatile stocks in my portfolio have been down already a lot this year. Lemonade got to $60 in May, Tattoo Chef got to $16 last month, Wish is still down, Fubo got to $17, Square got to below $200 in May as well, and many more. But if we check Facebook, Apple, Amazon, Netflix, Google, and Microsoft, they are all up by a lot or flat like Amazon. Obviously, Netflix and Amazon are only up about 6 to 8%, which is still excellent, but nothing in comparison to Google, which is up a whopping 64%, or Facebook and Apple around 35 to 37%. I posted a video about 3 days ago talking about my portfolio, showing you guys my position, my profits, my losses, my average cost, and everything, in case you would like to go and watch it after this video. In summary, historically speaking, April has been the best month for stocks and September the worst one. But as I said back in April when we were talking about that, being the best month does not mean that it is the best month to buy stocks, even though some went down. For me, the best moment to buy stock is during the worst month in the stock market, as I don't really like to buy on green days, but only on red days. I do have to say that I know that mentally it affects us to see our portfolio down and going down and down even more, and we should think it is the best time to buy an average down or start a new position. But I understand that it is really difficult mentally, as we believe it will continue dropping and we can get better prices or lose more money. My strategy has always been to never buy everything at once in case that happens. So if we really see a pullback or a crash or a correction during September, I would most likely add in small amounts during the drop, trying to not think that I should have waited and buy at lower prices, because it is impossible, at least for me, to know when it will start going up again. Try to always have faith in your companies and invest in companies you believe in the long term, in case that happens, you are able to average down or just hold your position and not panic sell because you're not 100% comfortable with your position in that stock. Obviously, if and only if the stock is dropping because of the market and not because the company did something that changed their fundamentals and your why of why you invested in that company. If that hasn't changed and the stock drops, find why it is really dropping, and if you believe it is just a short-term thing, then I would average down or hold and focus long-term. In my portfolio video, I show you guys the difference between long-term and short-term positions and why I believe long-term is the best way of investing ever. Now, do you believe we will finally see a pullback this month in the S&P 500? Hope you enjoyed the video. Please smash that like button and subscribe since it really helps the channel out. Thank you and see you next time.